tuning in. This is the Rice Crypto Show, and I'm your host, Chris Rice Crypto. And in today's episode, I have an interview with Jeff Berwick, also known as the Dollar Vigilante. Now, when I first started getting involved in Bitcoin, cryptocurrency, and blockchain technology, and started going down the rabbit holes of anarchy, anarcho-capitalism, and voluntarism, Jeff Berwick is one of the first people I started following. And we're just going to go ahead and get right into today's interview. Like I said, ladies and gentlemen, today we are joined by the Dollar Vigilante himself, Jeff Berwick. Jeff, I appreciate you coming on the Rice Crypto Show. How you doing today, brother?
I'm doing great, thank you.
I really appreciate you taking the time to do this interview. And the first question I like to ask people, especially for people who might be unfamiliar with who you are, do you mind giving people a little bit of a background about who Jeff Berwick is and how you got involved in cryptocurrency?
It's a bit of a long story, but I was born in Canada, and I started up an internet company in the 1990s, which is still the top financial website in Canada, called stockhouse.com. And it went from my basement to worth $240 million to being worth almost nothing again after the tech bubble collapsed in 2001. And so I sold it for not very much, and I asked a lot of people what happened, and no one seemed to know why these bubbles and crashes always happen. And someone gave me the book, The Creature from Jekyll Island by G. Edward Griffin, and I started looking into central banks. And that was sort of like my first red pill. I was like, oh, wow, this is not what I was told about. Actually, I wasn't told anything about central banking. They like it that no one really even knows anything about it. And so I just continued to look into things, looked into Austrian economics, libertarianism. I ended up buying a sailboat and tried to sail around the world, and I ended up sinking it in El Salvador. And I went on and I saw about 100 different countries because I knew what I was seeing on the television programming and the news wasn't exactly the truth. So I wanted to see the world with my own eyes. And by 2008, I figured I really understand what's going on now. And I had no idea what was going on, even like 8 years ago in 2000. And so when the real estate crash happened, real estate bubble or whatever you want to call it, financial crisis in 2008, I was expecting that completely. Actually, a lot of us Austrian economics people were expecting that. And after that, I said, okay, I understand what's going on here. And most people have no idea. So I wanted to do something to let people know. So I started the Dollar Vigilante in 2010 with the tagline, surviving and prospering during and after the dollar collapse. And I said, by the end of this decade, these things will probably be in collapse. And we're very close to it right now. We're actually literally on the precipice, in my opinion, right now. So that's kind of how I got into it. And the interesting thing was when I started the Dollar Vigilante in 2010, a lot of people said, well, you're talking about the dollar's going to collapse in the next decade or so. What's going to take its place? And in 2010, I said, I don't know, but I'm sure the market will come up with something. And in 2011, I was at Doug Casey's ranch called La Cafejate, Cafejate something in Argentina. And Trace Mayer was there, and he said, have you heard about Bitcoin? I said, no, what is it? And he told me about it, and he gave me my first Bitcoin, and then I started researching it, and within a few weeks, I said, oh my God, the market's already come up with an answer. And interestingly enough, Bitcoin was basically launched in 2009 as kind of a response to the 2008 crisis. And by 2011, I said, oh, wow, the market already has come up with something. So I began recommending Bitcoin at $3 in 2011 and have been one of the biggest proponents of cryptocurrencies ever since.
And I would agree, man. And that's one of the reasons why I wanted to have you on the show. When I first got involved in cryptocurrency and started learning about crypto, blockchain, and then going down the rabbit holes and learning more about anarchy, anarcho-capitalism, voluntarism, you were one of the first people that I started learning information from, you and Mark Passio. So, and then I started getting into Larkin Rose, all great philosophy information. And so I appreciate what you guys do. And that's the reason why I wanted to bring you on my show, so that I could share some of this knowledge with my following and people that are subscribed to my channel, because I talk about the same things you're talking about as far as we're on the cusp of an economic collapse. And by bringing on people like yourself and other economic people who know about how this system works, they can explain it to people in an easy way. So you're an anarchist, an anarcho-capitalist. You're the host of the Anarchast. You also created Anarchapulco, which is coming up in mid-February, and we can end with that information. But I wanted to get a little bit of your perspective on why you think since 2008, when basically we did all this quantitative easing with the Federal Reserve, I'd like to get your thoughts on how we got to this point, how we're still surviving and staying afloat.
Well, in order to fully understand it, you kind of have to go back a few centuries to the first founding of the first central bank. And that was the Rothschilds back in 1700s. Even when the founding fathers, the so-called founding fathers, which I think is so cultish, but people call them that when they first started the U.S., which was sort of a experiment in kind of half freedom, and it didn't really work out, as we can see today. But even then, there was many people trying to put in a central bank right at the beginning, and it was the people like the Rothschilds and people like that. And they kind of fought it off for a while, but they actually had a couple. There was actually two central banks before the Federal Reserve, and the founding fathers and people at that time were like, if you allow this, this is going to destroy the country. And they actually got rid of it a couple times. So they did a decent job of, even though some very evil people pushed it through, they got rid of it. And then by 1913, they really came up with a big plan. And this is where that book, The Creature from Jekyll Island, really comes in, because it talks about how they were planning this. It was all very subterfuge. They actually went on a train to Jekyll Island, all under like fake names. They didn't want anyone to know. They were all collaborating and conspiring to do this central bank. And then they basically essentially paid off or somehow got, I think it was the president at the time was Woodrow Wilson, to allow it to go through on December 23rd of 1913. Basically, Congress there was hardly anyone there. It was like a Christmas sort of break, and they pushed it through. And actually, Woodrow Wilson, after he wasn't president anymore, he wrote that he had let the country be sold out to the bankers. So that was the beginning in 1913. And of course, the central bank said, well, the reason you need a central bank, and it's all lies and propaganda, it's all Keynesian and communist lies. But they said, the reason you need it is because we will make it so there won't be any booms and crashes anymore. And all it's been since then, of course, because it is all caused by the central banks, is booms and crashes. And the very first one was, of course, the Great Depression, 1929. They pumped up the money supply all on purpose, caused this huge stock market boom. Everyone got into the stock market, and then they rescinded the money supply and they sold before everyone else. And then they bought it all back at pennies on the dollar afterwards. And this is what they've been doing now for a century. This is how it all works. So they went through that, and there's been numerous bubbles. And then we eventually got to the point in 1971 where there was still some backing of the dollar to gold. And the U.S. was essentially bankrupt again through wars. The Vietnam War, which was just a terrorist attack, killing who knows how many hundreds of thousands, I think, or maybe even millions of babies and women and all kinds of stuff in Vietnam and Cambodia and all that, along with Henry Kissinger, who's still around. But they were basically bankrupt at that time. And President Nixon, don't call me a crook or whatever he used to say, on August 15th, 1971, he came out and he said, we're temporarily rescinding the gold backing from the dollar. Temporarily, he said. And actually, it is kind of going to be temporary in one form or another, but we're still in it. And that was the first time, actually, that the U.S. government was completely unhinged or uncontrolled by any sort of gold backing on the dollar, so they could then go into as much debt as they wanted. And because the U.S. dollar at that time, because of the Bretton Woods Accord, which happened because of World War II, which was all planned and staged by the central banks, when they took away the gold backing away from the dollar was basically essentially the thing that every other currency in the world was backing itself by. So when the dollar didn't have gold backing anymore, all of a sudden every currency in the world, except for a couple, the Swiss franc and a few others, didn't go on the system. And so all of a sudden every currency in the world had no backing by any, definitely not by precious metals and by nothing really. So then we saw that huge inflationary period in the 1970s, and it was Paul Volcker of the Fed who came in around 1980 and said, basically, if we don't stop this inflation, the currency is going to go to zero. And he's right. And what they did was they allowed the interest rate to go to its natural market level. The Federal Reserve stopped manipulating the interest rate, and it actually went up to about almost 20%. And that actually stopped the inflation, and there was less money printing and that sort of a thing. So they got through that, and then through the 80s, and then into the 90s, then we had the tech bubble, which is all caused by money printing with Alan Greenspan with his whole Y2K hoax. And then we get to 2008 with the financial crisis. And 2008 really could have been the end of this system. There was so much government, it should have been really. At the very least, they had to at least do what Volcker did if they wanted to keep the system alive, which is just let the interest rate go to its natural level, which probably would have been 30 or 40% at that time. It would have bankrupted so many people, but it would have actually kind of saved the system. But instead, what they did, because there's so much government debt at that time, and actually back in 2008, the total US government debt was only about 8 trillion. I say only, but it was only 8 trillion when Barack drone bomber became president. It's now 22 trillion. It's almost tripled in the last 11 years. And what I think they decided, and this is what I thought as well, when they first went to basically 0% interest rates in 2008 and began quantitative easing for the first time ever, I said they will never be able to raise interest rates ever again because there's so much debt now. The US government had so much debt, and back then it was $8 trillion. It's now tripled. And that's what they've done. So across the world, they've just basically gone into a hyperinflationary policy of printing as much money as it takes to keep the system alive for as long as they can, which will eventually end up in a hyperinflation. And that's where we're very close to right now, because once again, they say that the market's done very well since 2008. It actually hasn't. It's just been money printing. And you look at people like Donald Trump, and he talks about, oh, the economy is doing great. They've printed up trillions of dollars in the last couple of years. So it looks like it's doing good, but it's actually not. And this is actually one of the real dangers of inflation, is it really confuses people. And so we're in a situation where the debt is so high. So you look at 22 trillion. If the interest rate were to go to 10%, that'd be $2 trillion per year in interest payments alone, which is almost the entire extortion tax base of the US. The IRS only brings in about 3 or 4 trillion, I believe, extorting tax slaves in the US every year. So you'd see pretty much all of the money stolen from people just go to pay interest on the debt at this point. So they say the market's been doing really good. It hasn't. And all of a sudden now they're like, well, we better start printing a lot more money. So they're going into QE4 now. This just happened the last few weeks. They've gone into the repo market. So overnight with the banks and their settlement systems, the banks are actually so leveraged, and they basically have no cash. So the Fed has had to go in and actually lend hundreds of billions of dollars overnight to the banks. And that's the first time this has happened since 2008. So we are at the very almost end of this system. This could happen any day now.
Yeah, and I totally agree. And that's one of the reasons why I wanted to have you on the show, because I mean, we're right on the same page with everything that you're saying. I totally agree with. And the book Creature of Jekyll Island's on my bookshelf right here. I have it as well. It's a great book. I encourage people to read it. The only things I'll add in that you kind of missed, but you did a great job explaining, I know you're trying to keep it short, was in 1933 when the United States government forced the citizens to sell their gold, and then at $20 an ounce, and then once they received all their gold, jacked the price up to $35 and made it illegal up until I think 74 or 75. When people in the United States could then buy gold again. So, and then when the Federal Reserve was created, the same time period, right after the IRS was created and taxation of labor, and Ronald Reagan was even quoted saying that all of our taxes are basically going to pay interest to the Federal Reserve. So, you know, it's kind of crazy what we got going on. And with this repo market thing, some people don't really understand this. Like, banks have to have a certain amount of money on their balance sheets at the end of the day. And because different time zones, when banks close, they lend money to banks that are open and vice versa, and they keep their balance sheets to be correct. And it's really interesting that they're calling these things capital injections and are printing up all this money, but it's really just another bailout. And people need to wake up, because had we not bailed out these central banks in 2008 and done all this quantitative easing, the system would have crashed. So we're basically on life support, and we've been a zombie system ever since. And like, basically, if you look at it as on being life support, that plug is about to get pulled. And when you talk about the inflation and the effects of hyperinflation, countries like Venezuela right now are a great example of what could happen internationally, globally. What happened in Zimbabwe, Argentina. So, I mean, these are things that I want to wake people up to and try to educate people, because like you say about the public school systems, the indoctrination camps, they're just programming and conditioning us to know what they want us to know. And it's time for us to use critical thinking, think outside the box, and think for ourselves and not believe what you're told. So I appreciate what you're doing, man. But what are your thoughts on the whole capital injections and bailouts that's going on currently?
Well, I think it's pretty predictable. In actual fact, the Federal Reserve has actually slowed down its money printing in the last few years. So most people don't even know what inflation is. Inflation is just an increase in the money supply. When prices go up because of inflation, that's a symptom of inflation, but that's not actually inflation. Again, they don't want anyone to know this, and I think it was John Maynard Keynes who said in the 1930s, not one man in a million understands inflation, and that's pretty true. I think today it's probably a little bit lower, like maybe 1 in 100,000, because of the internet and because of things like what we've been talking about. So people are starting to wake up, but it's really this is at a point where that you really just can't. It's out of control, but they've actually slowed down the money supply. So it's a very complicated, actually.
I know.
I'm not even an expert on all the numbers and how the banks do all their settlements and all that kind of stuff. That's why I work with Ed Bugos at the Dollar Vigilante. If you want to look at spreadsheets and that crazy guy who goes up against the wall in that meme, that's Ed with all the numbers and stuff. But really, like to explain it as simply as possible, which is basically my understanding, because it is very complicated, that when they slowed down the increase of the money supply in the last couple of years, that basically, because everyone is so leveraged, the banks are really actually becoming very illiquid right now. And that's why they've had to go into the repo market. And this is what happens at basically the end of every sort of cycle that the central banks cause. And this is called the Austrian business cycle theory. Like I said, the central banks they say that they're helping the economy by manipulating interest rates and by counterfeiting money, by printing up more money. It's ludicrous, and it's a total scam. It's a complete and total scam. There's nothing good about it. In fact, central banking is a tenet of communism. It's central planning of the monetary system. So, they're printing up all this money, and they've actually started to slow it down. And this is probably by design, in my opinion, because they do this all the time. This is what they always do. This is what they did in 1929. They print up a lot of money, then they slow it down. The people at the very, very top, and I'm not talking about Ben Bernanke or Janet Yellen or Powell. These guys are puppets. They're teleprompter readers. They've gone to their 8 years of government indoctrination camps after the 12 years of government indoctrination camps, and they've memorized all the Keynesian stuff, but they have no idea. These are actually completely clueless people. But at the very top, I think they know what they're doing. And I think what they're doing, again, is rescinding the money supply, which they know is going to cause a crisis. And what they'll probably try to do again is print up trillions. It'll have to probably be in the tens of trillions this time. Last time it was around, I believe, 4 trillion. It'll probably have to be about 15 or 20 trillion this time, which will basically cause hyperinflation at this point. So that's where we're at. And if you look at it, they're already doing quantitative easing 4. And that's why they've already started to go into negative interest rates almost worldwide now. In fact, the IMF, I believe, came out with a working paper on the necessity of negative interest rates earlier this year. And we've seen there's now trillions of dollars of government debt that are actually in negative interest rates, which I didn't even think was possible. And that's the only way they can keep the system alive at this point. And even look at Trump now, he's talking about we should go to 0 or negative interest rates. That actually is the only way just to keep the system alive for a couple years longer. But what it'll actually cause is hyperinflation. And you brought up Venezuela, Zimbabwe. I visited these places both in the last few years just to see what it's like. I've been to Argentina numerous times. They hyperinflate about every 10 years. It's like a national sport in Argentina. You know, it causes massive amounts of destruction. Not necessarily like Mad Max situation, but a lot of people get wiped out. Usually the lower class and the middle class get wiped out. The people who have a lot of assets actually do okay, because if you look at the Argentine stock exchange, it's up about 1,000% or even 10,000% or something crazy in the last 10 years in terms of the Argentine peso. In real terms, it's probably about flat. But it just goes to show that the people who have assets actually do okay because those assets will rise. So we could see the Dow go to 100,000 easily in the next year or two. But it doesn't mean everyone who owns stocks is going to be rich, because a Big Mac at the time will cost $30 or $50 or $1,000. Who knows? Once hyperinflation starts, it goes really fast. Just ask the people in Zimbabwe or Venezuela how fast this can happen.
Yeah, and I've seen how fast it can happen. That's why I try to, you know, that's why I put out the kind of content that I put out and try to warn people, wake people up, and try to get them to start thinking about what's happening. Because if they don't, then they're not prepared. It's not going to be good. Because with Venezuela, they're experiencing 85% poverty, which is absolutely insane to think about that. The other thing that I wanted to bring up is the inverted yield curve, because every time we've seen an inverted yield curve, which I think 9 times since 1960, it's signaled a recession. And we've seen this happen. And what they're trying to do with the quantitative easing 4 and the repo markets, they're trying to level that out. And some people don't understand what the inverted yield curve is, but people invest in the United States government with treasury bonds, and they are like different years for the bonds and different interest yield amount that they'll receive when the bonds expire. And in this case, a 2-year, a 10-year, and a 20-year is what people are looking at. And a 2-year should yield less than a 10-year, and a 10-year should yield less than a 20-year. But with an inverted yield curve, you're actually seeing people being able to get more interest off a 2-year versus a 10-year, where they're right about the same. And it's not supposed to be that way. So this is just one more signal that's showing us that this is coming. And usually this is within like 12 months. So I'm going to say roughly, without, you know, them trying to print up a whole lot more, I don't really see this lasting too much longer. And I see your prediction of the crash of the US dollar happening before the end of the century.
Century?
Maybe in the end of next year is what I'm saying.
Oh, okay. Yeah, end of the decade. Yeah.
Decade. Sorry.
I was like, no, we definitely don't have 90 years left here.
Yeah, I meant to say decade. Sorry. Thanks for the correction.
Yeah, so no, you're right. And so that's just another very big indicator. The inverted yield curve is pretty much almost right. In almost every time there's about to be a recession, which you could call what happened in 2008 a recession. Every single 2001, they call it a recession.
They called it the 2008 thing in my business, going to school for business. They called it the Great Recession. That's what they termed it.
Yeah, and it would have been a depression time. They would have called it the greatest depression ever if they would have allowed it to actually go through. But what they did was they printed up more money and put us into an area now where they just can't, there's no other options but just to keep printing until the currencies are all worthless. And the inverted yield curve is, it's pretty amazing how it's like one of the most sure sort of indicators that there's going to be a major problem coming up very soon in the economy. And this happened just in the last few months, and hardly anyone, CNBC, anybody, they don't really talk about it very much. If they do, they'll bring on someone who will go, well, it doesn't really mean too much. But it's just yet another indicator that we are very, very close to the end. And what you're seeing is, because it's all based on supply and demand, so normally, as you pointed out, someone who buys a 1-year treasury bond, which, by the way, in my opinion, buying treasury bonds is terrorist financing, because you're lending money to the largest terrorist organization in the world, the U.S. government and the CIA. But aside from that, it's also a form of money laundering. But normally if you lend for 1 year, you'd get a lower amount than if you lend for 20 years. That makes total sense. So if someone wants to borrow money for a long period of time, you're going to want more in return for it. But because a lot of the fund managers there's two reasons. They're looking for yield, and everyone's going shorter and shorter as they're starting to panic here, basically. And as they do that, they drive the price of the bonds up, which drive the interest rate lower. And they also are just trying to find some sort of yield at this point. And this happens every time right before a crash. So we've got every indicator right here that we are incredibly close. And yeah, sometimes it's about a year ahead of time that the inverted yield curve really predicts something, but I think this one could be a lot faster. It could be up to a year. I've said that this could happen, this crisis could happen within hours at this point, days, could be weeks, could be months. At most, I can't see this thing going more than 1 or 2 years before we're in a scenario that no one will believe. It will be 2008 will be nothing compared to what we're going to see in the next few months or years.
100% agree, man. And that's why I encourage people to invest in cryptocurrencies and in precious metals like silver and gold. The last thing I wanted to ask you about, because I know your time's a little limited, do you want to talk about Anarchapulco, when it is, and some of what's going on this year?
Sure, yeah. We just, it's February 13th to 16th. It's our 6th year. And we just announced some of the main stage speakers. So we have Dr. Ron Paul is coming back. We have John McAfee. Sherry Peel Jackson, she actually fought the IRS and still is to this day, and she was jailed for 4 years for doing so by trying to help people to essentially lessen their taxes, basically, all actually quite legally, but she was accosted and all that kind of stuff. Doug Casey, who I really love, he's basically, I call him sort of like a mentor of mine. He was the first guy who really turned me on to anarcho-capitalism and libertarianism and that sort of things. We have Freeway Rick Ross, who was one of the biggest cocaine dealers decades ago and spent 20 years in jail for it. And of course, we're anarcho-capitalists, so we believe that you should be able to trade anything you want. You should be able to put anything you want in your body. And that, I don't know why some people think that's crazy. Like, you own yourself. You can, if you want to ingest poison, you go right ahead. That's totally fine. Like, I wouldn't recommend it, but go ahead. So we have no problem at all with someone like Rick Ross, who was one of the largest cocaine dealers around. But I think the story that he's going to bring to Anarchapulco is just how much the CIA is involved in the drug market. They are the largest drug dealer in the world by far. And it's involved with George Bush. It's involved with the Clintons and all that. Then we have people like Del Bigtree, who's did the movie Vaxxed, a big sort of trying to wake people up to how they're really poisoning people with vaccines. Larkin Rose, as you mentioned, of course, he's pretty much a perennial every year. Jeffrey Tucker, who I consider sort of the prototype of anarcho-capitalist. He's always wearing his tuxedo, always talking about how the market is better than the government and things like that. Also happy James Corbett is coming down. I'm a big fan of James, a friend of, he's been a friend for a long time. He actually came to the first Anarchapulco 6 years ago. I could go on and on. There's so many great people. We haven't even announced the top speaker yet because it's a very, very big person, and we just have not announced it yet. We'll be announcing that. We haven't announced any of the Cryptopulco speakers, but that should be in the next few days, and it's a lot of the biggest names in crypto. So if you're into crypto, you should definitely be coming down. I think you've been there before.
No, I haven't, man, but I
Okay.
talked to you in Philadelphia, and you told me I could come out this year, and I'm planning on being at Anarchapulco and for the Cryptopulco as well.
Yeah, awesome. So it's going to be 4 full days during Anarchapulco this year, and we're just about to announce the names, so I can't tell you yet, but a lot of the biggest names in the crypto space and whole health and wellness sort of a thing. We also have the Dollar Vigilante Summit, which is before Anarchapulco. So the entire Anarchapulco thing, encompassing everything, is about 10 days, but you don't have to come for 10 days. I know a lot of people just can't do that, but the main event is 4 days, and in the 2 days beforehand is the Dollar Vigilante Summit, where we talk a lot about all this kind of stuff that we've been talking about and where to invest. And I agree with you, the two main areas that we recommend as well is precious metals and cryptocurrencies. And we're at about 80% precious metals, 20% cryptos for your average person, because, you know, we have a lot of grandmothers and stuff sign up to our newsletter, and we don't want to tell them, hey, get 90% into Ethereum, you know, and they lose their keys, and sort of, we don't want that. So,
Right.
you know, everyone can make up their own mind of what percentage they want, but that's what we kind of recommend. But those are the main two areas. And to me right now, it's a whole other story. Crypto is a crazy space, and if you can't handle volatility, then don't get into crypto. But the sure thing, like I, I've never seen anything more sure in my life than silver right now. Silver
I
is a
agree.
sure thing. It cannot go hardly any lower, so there's no risk, and it could go up hundreds of percent. I think even 1,000% in the next couple of years. It all depends on how the hyperinflation all works out and all that. So those are definitely the main areas. So if you can't handle the crypto volatility, definitely just look at precious metals. And if you can handle some volatility, crypto's got some huge potential, but it's not going to be easy. This space is a complete chaos and war. Like there's blockchain wars going on. It's actually a real microcosm of anarcho-capitalism, and it's actually great. But it is not for people who can't handle. If you can't handle roller coasters too much, crypto is like that, but it also has a ton of potential.
I totally agree, man. And I'm going to have links down below so people can check out the Anarchapulco website, your website for Dollar Vigilante, the Dollar Vigilante YouTube channel, and the Anarchast YouTube channel as well. Now, you mentioned your health and wellness stuff, and I know when you talk about this kind of stuff, I just have one last question just for curiousness, because I didn't really get the answer when I saw you in Philadelphia, but you had recently gotten the stem cell injections in your dick. And I'm just curious, like, what is that? What is that about? What is that like?
Well, for those people out there who don't know about stem cells, they're pretty much amazing. They're miraculous, in my opinion. And you really can't even all get them in the US. So the FDA has basically made it so you can't get it, or if you can, they're about 1% of the potency of what you can get in places like Mexico, which is a lot freer place than the US. And I've done stem cells now for a couple years, and my wife has done it as well. And that's all she talks about, because she feels so good after we do stem cells, and her skin is so much better, and mine is as well. Like, we are just complete stem cell addicts at this point, and I plan to do it probably every 6 months for the rest of my life. It's just like an IV that you do, and basically the stem cells are so amazing. They go into your body and they look for whatever isn't working properly or has a problem, and it just goes and fixes it. And we're talking like, if your knee's blown out, you don't have to go for surgery. You just do stem cells, and your body just goes and repairs it itself. It's amazing.
Wow.
It's miraculous. So I've been doing it for a while, and I do it in Puerto Vallarta at a place called Dream Body Clinic, and he's great. He's a narco-capitalist. His name's Joshua Kettner. I've had him on my Anarchast show about 4 times now, and he emailed me a couple months ago, and I had asked him about it. I said, what would happen if I injected in my dick? And he's like, I've heard about it. I heard it's really good. Like, it rejuvenates you. Like, I'm 48 now, and he's like, I've heard it's like you're 15 again, that sort of a thing. And so I did it about a month ago or 2 months ago, and I have to say, it's my wife is incredibly happy with it, and I'm happy too. I feel like in every way I feel amazing, and it's not just the stem cells. I do a lot of other things, and if you're into any of this health stuff, check out my Anarchast channel. The last 5 videos have all been on health stuff, because I've been discovering there's so many things out there that are so amazing that you will never hear from your doctors. In fact, if you have something like cancer and you go to the doctor, he's going to radiate your entire body, make you incredibly sick, and you're probably never going to be really well ever again, because you've just been radiated massively. You've been basically poisoned. You can actually fix things like cancer quite easily with things like fasting, a good diet. There's other ways as well with cannabis oil, all kinds of stuff. And if you're not sick, and a lot of people might say, well, why would you do this stuff if you're not sick? It's because you can actually feel way better than you ever imagined you could ever feel. And that's basically how I feel right now with all the stuff I'm doing, including the stem cells.
That's awesome, man. And I appreciate you sharing that. And I didn't know the last 5 episodes of Anarchast were related to those kind of subjects. So I'll definitely check them out. I've been playing catch up since I got back from Philly, because I had moved right before then, got back from Philly, and I had unpacked and set up my studio and all that good stuff. But Jeff, man, I really appreciate your time, man. I'm going to have links down below so everybody can check out all your content, all your different websites. And ladies and gentlemen, if this is your first time checking out any of my content, I do encourage you to explore my channel. And if you like what I'm doing, you can support me by subscribing, hitting that like button, commenting, and sharing. And as always, I encourage everyone to be the change by practicing change. And I love you all.